అన్ని బ్యాచెస్లో పెట్టారా? Good evening again. So yesterday we spoke about important indicators in budget. Today we will continue with them. We spoke about the trend of deficits. Deficits are very important because borrowing is important. Today we will see the numbers. Today we will try to see the annual financial statement. Whatever the concepts we have read, we will try to see the numbers, every detail. So I want you to remember the fiscal deficit 5.9% is estimated target, and similarly 2.9% as revenue deficit and 2.3 as its primary deficit. So when we speak about primary deficit, these are the interests on borrowings. Fiscal deficit is the total borrowings which is required, and revenue deficit is the difference of revenue expenditure and revenue receipts. This is what we spoke about, that these three numbers 5.9, 2.3, 2.9, these three numbers are to be remembered and reproduced in the examination. And when we speak about GST monthly, this is their initiative. They speak about this initiative, GST indirect tax collections increased or stabilized more or less around 1.5 lakh crore every month. It's hovering in and around 1.5 lakh crore. That stability is ensuring revenue side, that stability is ensuring revenue side, revenue receipt side for the government. Next one, increasing the capital expenditure. When we speak about expenditure, there are two important expenditures. One is revenue expenditure and the other one is capital expenditure. When we speak about becoming developed country, it's all about the capital expenditure. When we build infrastructure, when we build this country around infrastructure, the economy will have multiplier effects. Right, infrastructure, just remember, has multiplier effects, right? So for which we have quadrupled our expenditure in capital side, right? How much we have spent, now how much we are going to spend? 10 lakh crore is expected to be spent on capital expenditure. And another important thing, when we speak about Indian economy, whenever you speak about Indian economy, the backbone of Indian economy or the financial sector is banking. If banking suffers, if financial sector suffers, all other sectors will have to face the heat. Let it be industrial sector, let it be infrastructure sector, services, agriculture sector. Every sector will face the heat because there will be no credit offtake, right? Because of which, asset quality are one of the important parameter of banking. NPA, asset quality is important. India had a twin balance sheet problem, right? Balance sheet of the government is having fiscal deficits one side, and the other side corporate sheets also having fiscal deficit. It has to be one sided at least. At least corporate should be benefited or government should be benefited, but we had twin deficit problems because of banking issues. So we had to clean banking balance sheets. We went ahead with Indradhanush, we went ahead with different bank recapitalization programs where we infused capital to banking, especially public sector banking, right? And we have created bad banks, and there are many which we speak about in banking. Asset quality in bankings improving, lower NPA. So if you can see the percentage, 8.2%, now in September 2022 it is 5%. So NPAs are going down. Before it used to be, before COVID, 11%. When we started to think about these are around 15%, and we brought them down. We targeted them, we brought them down, right? So it is like rejuvenating the system, rejuvenating the economy. Bankings are the important institutions in economy, right? Important modern economic institutions, right? Next one, forex reserves. Forex reserves, although headwinds are there at the international arena, we have headwinds like Ukraine war is happening, we have international banks tightening their monetary policies, more contraction is there, monetary policies, money is going, our capital is outflowing from the country to those developed countries which are so-called safe havens for money, right? There are many headwinds, especially COVID-19, post-COVID-19, and there are trends of recession in European markets, and most of the time supply chains are distorted, although Chief Economic Advisor of India clearly said that the impact of COVID is gone. We don't have to speak about COVID impact on supply chains, COVID impact on economy, COVID impact on our numbers anymore. So forex reserves, if you can see how much forex reserves you have, 2023 almost on an average, if you can see 550 USD billion reserves are available, which will cover almost 15 months of imports. So it is well insured, this is in stable position, this is very good in position. That is the reason why we are trying to call it as Amrit Kal. Our fundamentals, our basic parameters, our basic macroeconomic parameters are sound. This can be a place where we can launch our Indian economy as we perceive to $5 trillion economy. Nirmala Sitharaman said before also in previous budgets they are targeting 5 trillion economy. They faced so much of criticism for that, right? So fundamentals are strong. Yes, these fundamentals are capable of pushing the growth which is going to imply the growth till $5 trillion or beyond. Wholesale prices convergence, retail prices. If you can see consumer price inflation, this is little tricky, this is little beyond the range of the RBI's, right? RBI given range is 2 to 6%, beyond 6% it is not good, right? If you can see 4 to 6, somewhere we are around 6.2, 6.5 like this, right? So we are not in band, the band is 4 to 6, but if you can draw the band, we are somewhere over and above the inflationary targets. We are still trying to target 6.8, 6.7, 6.6, it's like that, but we need to bring it to 6%, that is the target. And if you can see the convergence, what we have achieved, the convergence between CPIC and WPI is that the movement of prices are in synchronous, that is convergence. Convergence between WPI and CPI. Once upon this is headline inflation, now this is headline inflation. When we mean headline, when we use the word headline before any particular macroeconomic parameter, remember that is a parameter which is used by the government to target or to utilize that parameter for government policy making. So those numbers had to be repeated because you need to remember them for sure. If I again repeat them during my regular course curriculum, you will remember them for sure. Almost you already know that 5.9% is the deficit, and when we speak about the revenue deficit, when we speak about primary deficit, these numbers had to be remembered. If I do that 2-3 times in the class, I hope you can remember, so I keep doing that. Tax proposals, simplification, yesterday we spoke about indirect tax simplification. Direct taxes about data processing I spoke about. Income tax rebate limit increased in the new regime. To encourage people to migrate from the old regime to new regime, the rebate in income tax increased from 5 lakh to 7 lakhs. And if you can see the tax rates, there is one change. 0 to 3 lakhs, there is no tax to be paid. 0 to 3 lakhs, there is no tax to be paid. 3 to 6 lakhs, it is 5%. Before it used to be 2.5 lakh, and 50,000 is increased where they have exempted from income tax. Exemption is different from rebate. Don't confuse between exemptions and rebates. Okay. And 3 to 6 lakhs, it is 5%. 6 to 9 lakhs, it is 10%. 9 to 12 lakhs, it is 15%. 12 to 15, it is 20%. Above 15, it is 30%. That is how we need to keep this in mind. Okay, these are the income tax slabs. This is the tariff we have for income tax. If you want more information about that, if you can open financial bill of the budget, you will know. Normally accountants, chartered accountants or business people who are interested in saving their taxes, right? That is where they check into. Highest surcharge rate. Surcharge is a tax on tax rate on income above 5 crore to be reduced from 37% to 25%. The surcharge is reduced and the burden on high income people is going down. Extending benefits of standard deduction to new tax regime for salaried class and pensioners, as I said, 5 to 7 lakhs. Increasing tax exemption limit to 25 lakh on leave encashment on retirement for non-government salaried employees. Those employees who are not government employees, who are private employees, or any charitable institutional employees, any organizational employees who are retiring and they didn't use their leaves and they are selling their leaves to the organization and taking the money. If they are getting a lump sum amount of money, they don't have to pay tax up to 25 lakh. Without utilizing leaves also, they can sell their leaves and make money during the retirements normally. Simplifying tax benefits for industry. Enhanced limits for micro enterprises and professionals to avail benefits of presumptive taxation. 95% of the receipts to be non-cash, right? Non-cash dealings. Deduction on payments made to MSME to be allowed only when payment is actually made. So the focus is on making it simple for MSME and corporates. Extending 15% corporate tax benefits to new cooperatives commencing manufacturing till 31st March 2024. So we are extending 15% corporate tax benefit to new cooperatives or any manufacturing institutions which are going from till 31st March 2024, the financial year. Higher limit of 2 lakh per member for deposits and loans in case of PACs, primary agricultural cooperative societies, right? Cooperative societies they are focusing on and they are giving extending tax benefits to them. Higher limit of 3 crore for TDS tax deducted at source on cash withdrawal for cooperative societies. They are doing it for cooperative societies, they are doing it for MSME, they are doing it for the corporates. Especially when we speak about corporates, we need to speak about startups. Again, we speak the same topic in industry also. When we get into industry, we have to speak all these present fiscal policy design. Extension of date of incorporation by 1 year for income tax benefits to startups, right? To be called it as a startup, incorporation date increased by 1 year. Benefit of carry forward of losses on change of shareholding of startups from 7 years to incorporation to 10 years. So they have ensured that startup community will take the benefit from the present fiscal policy. Income of authorities, boards and commissions set up by the statute. When you mean statute, the law made by the legislature of union or state to be exempted from income tax in certain sectors. So this is vague explanation. These are for a common man, these are for understanding of a common man. But when you get into a particular chapter, you will have a detailed explanation. Extension of period of tax benefits to funds allocated to IFSC, GIFT City. As I said, it is like a SEZ for services, special economic zone for service sector. We are extending benefits to that. And we spoke about rupee coming and rupee, where rupee is coming to and where rupee is going into. So these are the highlights, budget highlights which were given by this particular budget. If you can see allocation to ministries, if you want to see the allocation ministry wise, how much every ministry money is allocated. Highest is Ministry of Defense, 5.94 peculiar to this particular government. Ministry of Defense is having 5.94 lakh crore budget. Ministry of Road Transport and Highways, MORTH, is having 2.70. Ministry of Railways is having 2.41. Remember these two. Infrastructure. When we speak about road transport and highways and railways, we are talking about infrastructure, connecting the hinterland, connecting the remote places, connecting the supply chains. It will benefit both the consumer and the producer. Next one, Ministry of Consumer Affairs, Food and Public Distribution, the major program NFSA 2013, National Food Security Act 2013, and many other benefits. Ministry of Home Affairs, Internal Security, 1.96 lakh crore, so 1.96, and we have the priority defense. You don't have to remember the numbers, although you just have to understand which is the prioritized expenditure for this particular government. What is the philosophy of their expenditure? That is what you need to understand. Ministry of Chemicals and Fertilizers, coming after Home Affairs. Ministry of Rural Development, Ministry of Agriculture and Welfare. You can see all these three together: agriculture, rural development and welfare. And you can see the Ministry of Communications at 1.23 lakh crore. So if you can see, these are the first 8-9 ministries which are allocated major budgets: 1, 2, 3, 4, 5, 6, 7, 8, 9. So by seeing this, you will understand that money is majorly allocated to ministries like Ministry of Defense, Ministry of Home Affairs for majorly security purposes and apparatus. And when we speak about North, Ministry of Road Transport and Highways, and similarly Ministry of Railways for infrastructure development. And after that, we focused on agriculture, welfare, farmers welfare, and similarly rural development, apart from Ministry of Communication. So this is how you need to understand the prioritized philosophy of expenditure for this particular government. And we spoke about all these things, right? If you speak specifically which scheme is taking more money, for which scheme more allocations are happening, prioritized allocations, this is the direction they wanted to go. Sir, I didn't get lecture 3rd yet. Okay, the team is telling that post this class it will be updated, Sharad. So they found it difficult to trace you. They are taking your ID again and they will be attaching that. Allocation to major schemes in crores. So if you can see development of pharmaceutical industry, the difference here between 2022-2023, the change you can see here, 100 to 1,250 crore. So which means that there is a shift in focus completely to develop pharmaceutical industry, right? Jal Jeevan Mission, 60,000 crore to 70,000 crore. When we mean these major allocations, you should know everything about these schemes. There is no exemption on this. Ekalavya model schools, you can see 2,000 here and specifically 5,943 crore budget allocation happened to Ekalavya model residential school. Pradhan Mantri Awas Yojana, 48,000 to almost 79,590 crore. So the drastic differences. FAME scheme, climate change, ecological friendly, environmentally friendly. FAME scheme for faster adoption of manufacturing of electrical vehicles. FAME phase 2, 2,908 crores to 5,172 crores. Northeast Special Infrastructure Development Scheme, they are focusing on Northeast, right? Their focus is now more on tight integration of Northeast into India. So this is where they have a special scheme, Northeast Special Development Scheme, Infrastructure Development Scheme. So This is the trend of revenue receipts. This is the trend of capital receipts. So we know what is revenue receipt. We know what is capital receipt already. So I hope this trend we may reserve after. We will see one document. After that, we will come back to this. So this is annual financial statement. We know what is annual financial statement. We know article 112, right? We know article 112. Tanishka, I don't think anything is pending in that. Please contact the team. Please contact the team. Next one. So annual financial statement of the central government 2023-2024, right? So as led before the parliament by the Ministry of Finance, Nirmala Sitharaman. You can see revenue account. You can see revenue account where we have receipts, we have disbursement, we have capital account, receipts, we have capital account, disbursements. We call it as expenditure in our regular terminology. Now in here we are seeing it as disbursement. Don't get confused. And disbursements charged on Consolidated Fund of India, we called it as charged expenditure. Contingency Fund of India, receipts and disbursements. So this is where this is charged expenditure, where it is mentioned 112, it is mentioned 113, it is said that it cannot be put to vote. Contingency fund you can see in 267 and consolidated you can see in 261 part 12. Public account you can see in 2662. So receipts and expenditure of union separately, territories without legislature. Okay. So these are the things which we have, these are the numbers which we have. Those doubts you had before can be resolved now again. What are there as part of taxes, which tax is having more, all these questions can be answered somehow. So if you can see Consolidated Fund of India, revenue account, receipts. I told you Consolidated Fund of India, how much money is coming into. Tanishka, there is some miscommunication to you. All those are done. If you have any problem, please contact the team. All those are done, as you said, these are not pending anymore. If you have any problem, please talk to the team. If you don't have numbers, please ask me, I will provide. Goods and service tax. First one. Tax revenue, tax on income and expenditure, tax on property and capital transactions, tax on commodities and goods service tax, tax on union territories, taxes of union territories. This is what we have. Now normally again, if any student is having doubt, you can see we have GST, goods and service tax. We have goods and service tax. This is a tax on goods and services. The second one is the tax on income and expenditure. The third one is taxes on property and capital transaction. The fourth one is taxes on commodities and services other than GST. Able to understand? So if you can see 2021-22 numbers, 22-23 estimates, revised estimates, budget estimates for 2023-24. If you can see the GST, the total GST, you can see the numbers in crores. It is 9,60,535 crores is estimated to be coming from goods and service taxes, especially CGST. More is there in CGST. As part of this GST, we have CGST, UTGST and IGST, but major component, major money is coming from CGST. So this is what we need to remember. 9 lakh crore is coming from this particular tax on goods and services. So because of which our supply chains, our markets are important for us. Right? Next one. Taxes on income and expenditure. Taxes on income and expenditure. Majorly corporation tax, if you can see, taxes on income other than corporation tax, hotel receipts tax, interest tax, fringe benefit tax, other taxes of income and expenditure. So these are the different taxes we have. Don't go back to your traditional textbook and see all those taxes. Try to see what taxes are present in budget. Taxes on income and expenditure you have here. So this is 17,95,625 crores we are getting from corporation tax and taxes on income. Normally taxes on income and expenditure are direct taxes, GST is indirect tax. The next one is taxes on property and capital transactions. Any property stamp duty, stamp registration duty, estate duty, taxes on wealth, security transaction tax we have, right? These are the taxes we have, 27,625. Taxes on commodities other than GST, banking cash transaction tax to disincentivize cash transactions and bring digital transactions, customs, union excise duties, sales tax, service tax, other tax and duties, right? You have almost 5,72,600 crores. So likewise, the total taxes you have, gross tax revenue, if you can see, this is the sheet you need to keep and understand what are the different taxes you have. So normally a student go to the textbook and come back here. You need to see this and go back to the textbook. So if you can see, gross tax revenue, you have 33 lakh crores. 33 lakh crores is the gross tax revenue. Whereas non-tax revenue, where is non-tax revenue coming from? Fiscal services, example, by printing currency, coinage, mint, by doing other fiscal services. Interest, receipts, dividends and profits. Other non-tax revenue and regular services like police, jail, all these supplies and you have different services here. By providing these services, you have other non-tax revenue. This is the total amount we have, right? We'll try to see the total. So these are the different list of services, right? When we're talking about other non-tax revenues, general services, defense services, social and community services, economic services, all these are the services, right? All together we call it as non-tax revenue. Next comes non-tax revenue of union territories in Consolidated Fund of India. So all together put the non-tax revenue, if you can see, it is 6,40,590 crores. So in revenue receipts, tax revenue, non-tax revenue, tax revenue is more than non-tax revenue. So non-tax revenue is around 6,40,000, right? And whereas when you see the total tax revenue, gross tax revenue, if you can see 33,60,858. So the total revenue receipts for the estimated year is 38,50,443. So this is the receipts side. So in the article, we saw separate statements are required for receipts, expenditure, right? So that is how these are taking origin. Revenue account, disbursement. In disbursement, how the money is being spent in detail. General services for the functioning of organs of state like parliament, legislatures, council of ministers, for conducting elections, for conducting audit, for tax collections, for collecting the taxes, for other fiscal services, interest payment and servicing of debt. If you can see that interest payments, how much, and servicing of debt, you can see 99,971 crores is going for interest payment servicing. Here you don't have to remember the numbers. Here try to see how the money is going. I'll show you the numbers again. I'll show you the numbers which you need to remember. For administrative services, for pensions, for defense services, for social services, right? And for economic services, for rural development, special areas programs, especially for northeastern areas, are MP lad scheme, member of parliament, local area development scheme, irrigation and flood control, energy consumption, industry and minerals, transport, communications, S&T, especially atomic energy research, general economic services, and grants in aid and contributions. While discussing effective revenue deficit, I spoke about grants. So total revenue disbursements, if you can see, we have equaled that to the same number, 38,50,443. So public debt, if you then comes public debt concept we'll discuss little later. We'll go back to the receipts. So this is the macroeconomic framework statement, one of the important statement which you need to keep in mind. We calculate GDP at market prices, at constant prices, which are 2011-12 prices. The growth rate percentage change, if you can see, 7%. GDP growth rate for 22-23, you need to keep the number is given by the budget. IIP, Index of Industrial Production, 5.5. WPI 11.5. We spoke about the convergence of WPI and CPI. CPI is the headline inflation rate. We have 6.8. So similarly, we have the forex. We spoke about forex. You can see here forex 56 billion, right? As I said, 56 billion, which is almost covering for 15 months. And the numbers which you already know, the fiscal deficit, this is the fiscal deficit, this is the primary deficit, and this is the revenue deficit. Revenue receipts, capital receipts, revenue receipts, tax revenue and non-tax revenue. Capital receipts, recovery of loans, borrowings and other liabilities. If you can see, how much is the fiscal deficit? How much is the fiscal deficit? I want you to notice one particular parameter here. I want you to notice fiscal deficit is this much, right? And see the borrowings and other liabilities. These two numbers are equal. If you can see, these two numbers are equal. What is fiscal deficit now? It is the total borrowing and other liability of the government. Forget about revenue deficit. It is revenue receipts and difference of capital, revenue receipts and revenue expenditure. 3A and 1, revenue deficit. And coming to primary deficit. Primary deficit is talking about interest burden on the debt. So I just want to show you this particular number, that the fiscal deficit is the total borrowings, that we need to keep in mind. You are getting confused because of the numbers here, because there are three accounts we are dealing. One is consolidated fund, one is contingency fund, the other one is public account. Normally we don't remember these numbers separately. We remember the total revenue receipts and total revenue expenditure, capital receipts and capital expenditure. The moment I opened up these numbers, don't think that this 38 lakh crore is the total revenue receipt. This is only in Consolidated Fund of India, one account only. We are talking about three accounts. So that is what you need to keep in mind. That is the reason why you don't have to remember these numbers. The numbers which I showed now, macroeconomic numbers, those are the numbers which you need to remember. Okay. So likewise, we have different statements in financial bill, annual financial bill, Consolidated Fund of India, capital account, disbursement, where the money is going into different areas. The same disbursement. Disbursements charged on Consolidated Fund of India. If you have any doubt, these are all charged according to Article 1123. And you can see Contingency Fund of India. How much is there in Contingency Fund? 30,000 crore money is there in contingency fund. These numbers are not updated because we don't estimate any contingency. Next one, public account of India is another side. Receipts, where the money is coming from, state provident fund, reserve funds. See the reserve funds, what are the different reserve funds we have? Central Road and Infrastructure Fund, National Highway Fund, Prarambhik Shiksha Kosh. These are the different funds we have created which are public account. So that is a third statement. And all these are the different funds. When you don't understand Consolidated Fund of India, when you don't understand contingency account, when you don't really have the clarity on public account, you can open up and see this particular annual financial statement and you will understand these are the different heads where money is going into. So that's it. This is of Union Territories. These are the accounting of Union Territories. Tax revenue, non-tax revenue of Lakshadweep, Ladakh, Andaman Nicobar, Chandigarh. Right? This is what Constitution envisaged. This is what Constitution said. You need to have separate account statements for Consolidated Fund. Similarly, contingency and public account and different account for revenue and expenditure and also for Union Territories. So that is what we see. Wherever the money is going into, right, at a little microscopic level, we will get here in the annual financial statement. But unless you don't understand the concept, you don't have to open this particular document, piece of document. Normally, the document we open is this. Okay. Let us understand this budget side. So these numbers are from April to December. April to December, you don't have all the quarters. Remember one thing in mind, right? The second one, when we talk about macroeconomic framework, we are talking about previous year, 22 and 23. We are not talking about 23, 24. These are not the estimated ones. This is macroeconomic framework statement. This is what happened till April to December last year. I mean present financial year, because we are still in February. If you can see the revenue receipts, if you can see the revenue receipts here, 22, 23, 21, 22, 22, 23. So revenue receipts is 14 lakh crore and capital receipts is 10 lakh crore, and if you can see the total expenditure is 24 lakh crore, and similarly the revenue deficit is almost 5 lakh crore, 72,522 crores. Next one, fiscal deficit and primary deficit. Why these numbers are different? Because these are only from April to December and we are talking this as a previous year values. These are the values of previous year, I mean the present financial year, covering one quarter is not there. January, February and March is not updated. So that is the reason why these numbers look less for you. Okay. So that is the reason why macroeconomic framework statement is not talking about estimates. It is talking about previous numbers. The only reason why I have opened this is to tell you the fiscal deficit. You just see the fiscal deficit number and try to see the total borrowings in capital receipts. You have the same number. When I said you need to remove borrowings from the deficit, this is what I mean, right? Fiscal deficit is directly the total borrowings. So these are the numbers we need to remember. And estimates 2023-24 estimates. Why I had to tell effective capital expenditure? Effective is because of this only. First one, we will try to see the total revenue receipts. Total revenue receipts is 26,32,281 crore. Out of this 26 lakhs, 23 lakhs is coming from tax revenue. This is what we are estimating, budget estimates, right? 23 lakhs we will collect from tax revenue and 3 lakh crore from non-tax revenue. This is revenue receipts. And if you take capital receipts, we will take 18 lakh crore, and significant number which you need to remember is 17 lakh crore, 17 lakh 86,816 crores is the money which we are borrowing in capital receipts. Out of 18 lakh 70,000, almost 17 lakh 86,000 is what we are borrowing. This will become the fiscal deficit. Can you see the two numbers same? These two numbers are same. Clear? So the total receipts will become 45 lakh crore, but 45 lakh crore is coming from 1 plus 4. This one added to this is coming to this number, but actual receipts is minus this borrowings. If you have to see the actual number, you have to remove these borrowings. That is the reason why we call it as fiscal deficit. The total expenditure we have is 45 lakh crore and the deficit we have is almost 70 lakh crore, 17 lakh 86,816. This number you should remember, 1786816, which is 5.9% of GDP, which is 5.9% of GDP. This is to be remembered. And if you come to the expenditure, in expenditure, how much is going for interest payments? How much is going for interest payments? 10 lakhs is going for interest payments. And revenue account, it is going for 35 lakh. And grants in aid for creation, it is going 36,000, sorry, 3,69,000. On capital account, it is 10 lakh crore. Capital expenditure, how much capital expenditure we have? On capital account, the capital expenditure is this much. On revenue account, this is 35 lakh. Which should be more, capital expenditure or revenue expenditure? It should be capital expenditure, but it is 10 lakh crore. But still we had made it 4x. When we increased the capital expenditure 4 times, it reached 10 lakh crore when we compared to the previous year trends, later 3 years before financial years. Now it is this much, and 35 lakh crore it is going for revenue account. So that is the reason why if you see effective capital expenditure is more here. When you compare to the capital expenditure, effective capital expenditure is more, which means around 3,70,000 crores is the amount which went as a grant became capital expenditure in the states, right? That is the reason why we have come up with effective capital expenditure. And similarly, the revenue deficit, if you can see, revenue expenditure minus revenue receipts, it is 8,69,855 crore is the revenue deficit, which is 2.9% of GDP. Normally you will remember the percentage as part of GDP. 5.9, 2.9 and 2.3 is what you will remember simply, right? So in this effective revenue deficit, if you see the revenue deficit, this is 8,69,855. But if you see this particular revenue deficit, effective revenue deficit, it is almost 4,99,000. The remaining we have added it to the capital expenditure and we called it as effective capital expenditure. Revenue deficit is more than effective revenue deficit. Effective capital expenditure is more than capital expenditure. Remember that. CE is less than effective capital expenditure, but revenue deficit is more than effective revenue deficit. The difference is that capital creation of assets. That is what we spoke about, right? So fiscal deficit, if you see this formula, 9 total expenditure minus 1 plus 5 plus 6, this one. So this is what fiscal deficit, except this one, except borrowings is called fiscal deficit. You can remember that particular formula. Fiscal deficit is revenue receipts minus capital receipts except borrowings and other liabilities. That is what we need to remember. Clear from this equation? Effective revenue deficit is 15 minus 12. Revenue deficit minus grants in aid for creation of capital assets. That is 3,69,988 crore. That is added to this particular capital expenditure and removed from revenue deficit to bring effective revenue deficit. If you can see 15 minus 12, and if you can see with the effective capital expenditure, 12 is added to 13. Added to 13, it is removed from 13. And if you see the primary deficit, you need to take fiscal deficit minus 11, that is interest payments, that is 10,79,971 crore. So if you see this primary deficit, how much is the primary deficit? So with this fiscal deficit minus fiscal deficit without interest payments. So this will become the core deficit you have. How much interest payments we have? How much interest payments we have? Primary deficit 17 minus 11, 11th one is 10,79,971 is the total interest payments we have. We removed that from 17,86,816 and we got 70, and this is we can consider as present deficit, present borrowing required to meet the budget expenditure, right? What is the present borrowing required to meet the budget expenditure? This is the these are the numbers we need to remember. We'll try to see it one more time. So you have fiscal deficit which is 5.9% and you have revenue deficit which is 2.9% and you have this particular primary deficit which is 2.3%. Interest payments, without interest payments, what is the deficit? This is the primary deficit, is the deficit which is the which is the deficit we have for the budget expenditure at present. If you add interest payments to this, it will become fiscal deficit. If you add fiscal deficit, if you add borrowings, then that will become budget deficit. Okay, so budget deficit, fiscal deficit and primary deficit. So these are the numbers 5.9 and 2.9 and 2.3. So 5.9 and 2.3 are related. We will try to see once again revenue receipts. We have 26 lakh crore revenue receipts, out of which 23 lakh crore is coming from tax revenue, non-tax revenue is 3 lakh crore. In capital receipts, we have more from, which is 17 lakh from borrowings and liabilities, whereas 23,000 and 61,000 from other part of the capital receipts. What we call them as non-debt capital receipts, we can call. In the circle which we discussed yesterday, it is called non-debt capital receipts. This is debt capital receipt. This is non-debt capital receipt. Non-debt capital receipt is around 84,000 crores. Okay. So apart from which, this is what we have, and this is the total fiscal deficit we have. If you see the formula of fiscal deficit, 9 minus, that is total expenditure, minus 1 plus 5 plus 6, which means revenue receipts minus revenue receipts plus in capital receipts without borrowings and liabilities. Okay. Fiscal deficit is the total amount required to meet the budget expenditure at present times. But if you remove the interest burden from it, it will become the primary deficit. This is the primary amount we require to meet the present day expenditure, excluding the interest burden we have created from that data. So, and if you take the effective capital expenditure, you need to add on capital account grants for creation. If you add these two, this will become this. And similarly, revenue deficit, if you take the revenue deficit, if you remove this particular thing from this revenue deficit, that will become this one, effective revenue deficit. From effective revenue deficit, you need to remove grant in aid for creation of the capital asset, whereas for effective capital expenditure, you need to add that particular grant in aid for creation of capital assets. So the budget size is 45 lakh crore. The budget size is 45 lakh crore, out of which 17 lakh crore is your deficit. But remember, out of 45 lakh crore, 17 lakh crore, consider it is 18. Let us consider it 18. 18 is how much? Almost 40% is debt. Almost 40% is debt. 40% of the budget size. But in GDP, that is the reason why we are seeing it in GDP and coming to that particular number 5.9. That is the reason why we need to target fiscal deficits 2.5, 4.5. These are the targets which are required to reduce the debt burden. We cannot have so much of debt burden in the name of revenue expenditure or on the schemes. So I hope this is clear for you. So this is the circle which we spoke about in the other one also. So we'll discuss about debt. We'll discuss about debt tomorrow, external debt, what is public debt. These things we will try to discuss tomorrow. These are the only numbers you need to remember. You don't have to go to annual financial statement and remember separate numbers for consolidated, contingency and public account of India. All right. So thank you. Thank you very much. We will try to see in tomorrow's class. Sanyam Sakre, try to coordinate, because this is not only for the beginners, this is also for those people who are taking attempt this year. So we will cover the classes, and budget is exceptional. Obviously, you need sound basics to understand budget. All right. Thank you very much. We will see tomorrow. Thank you, Kritika. Thank you, Sohini Vishwas. Thank you, Praveen.